Okay, folks, welcome to Market Wrap, not Market Wrap. Welcome to Thursday Night Stock Charts live. I usually do that for Market Wrap, which is for members, the remainder of the week. Okay, Franklin, good evening. TA, you got it, brother. Okay, as we wait for people to filter in here, let's talk about some headlines and some higher level thinking that at least is going through my head right now as the triple Qs hit all-time highs yesterday. They didn't hold it, but they hit all-time highs yesterday. So Dalio comes out, Ray Dalio, conflict will continue to intensify. I couldn't agree with him more. Sometimes I disagree with him. On this point, I couldn't agree more. We are beginning to see democracy slip into anarchy. The question is why? Why? And why will it get worse? And the answer is that we have incompetent leaders, and we have it's certainly not hurting right now, but it will be. We have a debt bubble that is poised to explode. And if we think that we've seen civil unrest now, we haven't seen anything yet. So, Dalio, dead spot on. Project Veritas. I'm going to share this link. Everybody should watch this video from Project Veritas. I've been saying this, that this is not some off-the-cuff riots. What we're seeing is planned out. It's in Europe. It's in the United States. And they had better get a hold of this real fast and real quick. Thanks, Denny. You know, I was talking to Denny, just made a comment about the background. I wasn't going to say anything. I wanted to see if anybody said anything. But I was talking to this other YouTuber, and he's like, man, you know, I said I want to get my views up. I want to get my build a channel. He goes, and he's got a big channel. And he goes, you need an interesting background. Your background's not interesting. And I was kind of hurt by it, but I said, all right. Because I looked at his earlier videos, and he says, after I changed my background, my views just blew up. So change your background. Hey, Trisha. Good to see you. Seymour, hi. Chuck, hey. So that's why I did it. I'm going to be messing around with backgrounds. I like this one. It's kind of like a lobby in a hotel. So check out that video. And finally, what took them so long, I have no idea. DOJ, investigation as more evidence emerges that someone is orchestrating violent riots. You think? Pallets of bricks pop up out of nowhere across the country overnight, over and over and over again. You think this is orchestrated? Incredible. And we don't have inflation yet. We don't have real inflation yet. It's coming. Larry just said, good evening, Bob. Agreed, this is about to get very ugly. Yeah. You know, I never planned on buying a gun before in my life. I am now. I drove past. I sent a text to one of my fellow members. I drove past a local gun store because he's an outdoorsman. And I look over because this is where I get my propane for my barbecue from as well. I look over and there's a line out the door. I've never seen it before, and I've been living in this town for over 25 years. So people are ticked and scared, and rightly so. You're the second one. Franklin just said, get some classes on the use of weapons. You're the second one that said that to me today. So yeah, point well taken. I don't know if Patrick's on. He's the one that told me about it. He said the same thing. Looking at inflation to really pick up in August. Bought tips today. Be careful of that. Be careful of that, Larry. Don't get too heavy. Tips. I'm going to go over that chart in a moment. I don't think that the short-term deflationary pressures are over just yet. And yields. And I'm going to go over this tonight. I'm going to be talking a lot about yields. They're moving up higher. So as those longer-term yields move up higher, you're going to see pressure on gold. You're going to see pressure on inflation and the tips. So be careful short-term. Longer-term, I agree with you. Adrian, speaking of guns, can you look at RJR? That's Ruger, right? Okay. Someone said online next to loot. So online next to loot are the houses. Well, they already started doing that in Brooklyn, New York. That's what when I saw that. That was it. That was it. That's what changed my mind. Okay, let's go to the weekly chart. So what we do here is on Thursday nights, for those that are new, thanks for joining, by the way. Smash that like button. If you could, please. What we do on Thursday nights is we take a look at, we provide a cursory overview of the thought process. Where are we at in terms of psychology? We have a market, at least the triple Qs, which for all intents and purposes has been the leadership in the stock market for quite some time now. They hit all-time highs yesterday. Think about it. All-time highs. And I expected it to happen. I covered my shorts a couple of weeks ago, and sure enough, sure as God made little apples, they hit all-time highs. Will they, Larry, pistol grip shotgun, I believe is illegal in my state. I already looked into it. I have to look further. I'm going to be calling around to people getting advice on a good weapon, but it's going to definitely be a shotgun. So we have inflation that is definitely out there, at least in terms of agriculture. We have yields rising at current. Let's go to the weekly charts and let's talk this through. More than, 1.8 million people newly unemployed this week. And tomorrow is the, as I like to call it, the pimp Mac Daddy of them all in terms of economic data. That is non-farm payrolls. So that's going to be an interesting one, to say the least. So what I want to do tonight is kick things off with the yield curve. And we look at the yield curve because we know when the yield curve is declining, it is narrowing, it is inverting. The stock market tends to rally. And many people believe that, no, you hear the inversion of the yield curve, oh, you have to sell your stocks. No, you don't. You stay long. You sell your stocks or you begin to lighten up when the yield curve steepens. So the question then becomes, where are we now? And this is a monthly chart. And the monthly chart, you can see that we are steepening. Overlaid here in blue is the S&P 500. And we have a new higher monthly high. And we are trading at current at the highs of the month. So you can see from periods past, let's go back a few years. Let's go back. Let's include the dot-com crisis. Okay, so yield curve inverted. This is 2000 to 2001. Steepened. S&P 500, overlaid in blue, boom, hammered. Fast forward, 2006, first leg of the double bottom, inversion. Second leg, 2007, inversion, steepening, beginning 2008. Stock market still moved up higher as it's doing now. But then it rolled over. Fast forward to present day. Here we are yet again. Potential double top on the S&P 500. We'll probably continue up higher here. Just as you saw back here in 2000, just as you saw back here in 2007. And again, I'm not predicting that we're going to crash tomorrow. In all probability, they're going to continue to spike the beaten up names higher. And probably up into the election. Unless, of course, they decide to, at some point in time, the powers that be that are undermining the president, and I am of the firm opinion that there has been a coup d'etat ever since he got into office. At some point in time, they're going to have to realize that what's going to keep the president in office is the stock market. So the question then becomes, how do these anarchists, and they don't necessarily need to be Antifa to be anarchists, all you need to be is a left-leaning central banker. And we are all kind of screwed. Pardon my language. So beware the yield curve here. That's a snapshot in time where we're at right now. Perhaps it'll change by the end of the month. Maybe we'll be inverting again. Who knows? Or we could be higher. The 10-year yield. Let me take the labels off of here. Now, the yield on the 10-year has closed now at its highest closing high since the week of March the 16th. This is a weekly chart. We have had a tug of war these past several weeks with the bond vigilantes pushing yields up higher, the Federal Reserve knocking them back down. This week, bond vigilantes look like they had the upper hand. Federal Reserve has one more trading day left to go. So tomorrow, especially on the heels of that non-farm payrolls data, is going to be interesting. So if we see higher highs, the place to be are the banks. Stokes looking good. RSI's looking good. The path of least resistance at current is higher on yields. And the market so far has been behaving fairly well. Now remember, when the market buckled and Jay Powell finally had to say uncle in terms of allowing yields to rise, was when we had a two-handle and the stock market began to roll over. What's it going to be now that we have so much more debt and the stock market is so much more addicted to QE? What's it going to be now? Is it going to be 1%? Is it going to be 1.5 before the stock market feels like we can't take that high of a rate? What's it going to be? It's a scary thought. How does the Fed ever normalize? And God forbid what happens. How will they ever fight inflation? So it's a scary thought. So if you're worried about, as Ray Dalio is alluding to, civil unrest, and we have yields down below 1%, what happens when we have hyperinflation or even inflation? And you have yields which are at 1.5%, 2%, 3%. Blood in the streets. The TLT, the 20-year bond ETF, we're short of bonds, not heavily, but we are short. And bonds are rolling over, taking it on the chin, forcing yields up higher. This is a daily chart of the TLT, and I wanted to point out on this chart that we are kissing the third standard deviation Bollinger Band. In all probability, we're going to get a pop higher either tomorrow, Monday the latest. Volume is rising. the tips, and this goes back to what, I forget who mentioned the tips earlier. I said to be careful. Yeah, Larry. Be careful of the tips, because what's happening here is that, let me go to my annotated version, is that here we go. What we're seeing here is a break of support after putting in a lower high. Right? So if we close out the week below this lower band of support, that's a problem. Now, if the jobs data comes out extremely strong tomorrow, that will probably get exacerbated a bit. Or maybe not. The tips may rally because, yeah, the tips will probably rally. But this is a very weak setup here. I'm worried about more downside on the tips. And here's a couple of support levels to watch. 119 spot 75 to 118 spot 75. Look at this. Very, very weak. Very, very weak on the indicators. Still one trading day left to go. If nothing else has taught us anything about when we do Thursday night stock charts live, is that one day can make a huge difference. So this chart could look completely different by tomorrow. And on Saturdays, I do the week ahead commentary where I take these very same charts and I go over the closing price action of the market from the prior week. And from that data, and from the monthly data as well, we strategize about what we want to do. How do we want to position ourselves going into the next week? And we discuss our positions and focus stocks that we want to try to put on the coming week. So take advantage of the 14-day free trial offer. There's a link below if you want to get more data on it. The dollar. Now, here is probably one of the most concerning charts that I am looking at. You need to take a look at the United States through the lens of the globe. And at current, the globe is seeing the United States mired in war, mired in debt, and now civil unrest. And the threat of the president, I believe rightly, many people are going to disagree, I believe rightly, if a governor is not going to do his job, the federal government's got a responsibility to do their job, sending military into states, which we don't want, but it's a possibility. If you're looking at the United States as the world leader through that lens as a world leader, and you're seeing such unrest, do you want to own our dollars? Do you want to own our bonds? And if nothing else, this past week and a half is telling us the globe is losing confidence in the dollar and in bonds. Both of them are selling off at the same time. And I've always warned about this. If there's one thing that's always gotten me worried about the future of the market, if anybody had to say to me, what don't you want to see if you're concerned about the economy? What it is I do not want to see a drop in the U.S. dollar and a drop in bonds at the same time. Because what that means is you have a double whammy. You have the U.S. dollar is dropping, so we import most consumer goods. Therefore, it takes more dollars to buy more goods. And if yields are going up, you have less discretionary income, and it's harder for people to borrow and to buy things. And it just clamps down. It's like an engine that seizes. The cylinders just won't move anymore. It locks up. And that's what worries me the most. And you're beginning to see signs of it. And when you take a look at the US dollar on a monthly basis, I mean, it's bad. I mean, take a look at this topping action. We flashed a bearish reversal bar last month. We closed above support. This month, we have taken out the prior month's lows. We've taken out support. We've taken out the 20-period moving average, which is still rising. And before I, become all doom and gloomish here, it's still the first week of June. For all I know, we'll close at the highs of the month. Maybe we'll take out last month's highs. I don't know. I'm not that smart. All I'm dealing with is a snapshot in time at current. I'm not making a prediction, but at current, it is not confidence building to see this type of price action. Yeah, George Soros, don't get me started. The VIX. So you take a look at this chart and you say, man, this is one bearish chart. And it is. The week we have, so far this week, we have an outside reversal week. We have fully engulfed the prior week's price action, which is a doji star formation. Now, if I were net long of the market, what would concern me is that we're holding support, that we did in fact have a doji star formation last week. It's a sign of indecision, a tug of war between bulls and bears. And it's an indication that you just may, get a trend reversal. And since March, the trend has been down. They tried to rally it this week. They were rejected. Now, here's what's concerning. Daily chart. I spoke about this with members on Monday. We have a breakout on daily RSI. And at current, we closed up on the day, reversal bar, and we're holding key support. Stokes are oversold. I really don't like that term too much when using Stokes, because Stokes, you can stay oversold, and people hear oversold, they say, oh, I have to go in and buy, and that's when people lose a lot of money when they're trading with indicators. Denny, our bonehead mayor, Garcietti, promises to redirect $250 million in LAPD funds. To where? Where does he want to send it? To bail out protesters? The Dow Transports, weekly chart. Extremely bullish chart. Now, if you're waiting for my caveat of what's concerning, it's the fact that we are at very, very stiff resistance at the 9,600 mark. And we even backed off of it today, closing at 95.75. Big volume. Out of curiosity, I want to take a look at the daily chart. It looks like they're going to try to make another run at it. Massive volume today. I think what you're seeing is a lot of, let's go to the airline index. Yeah, that's why. The airline index. Very overbought. But a ton of shorts. This is a big short squeeze in the airline index. So the transports can continue higher here. The Dow Jones Industrial Average weekly chart. Good rally right up and into the 50-period moving average. These indicators still look good, I have to say. Volume may roll a little bit light versus prior weeks, but still relative to the pandemic, Still very, very healthy volume. The S&P 500 weekly chart, big breakout, up 2.23%. I think that maybe next week, what might happen, assuming that we close above this resistance level here, is we'll pull back and probably retest that critical support level at 30.50. And if you're looking to buy the market, I would do it then at that retest. Use a stop loss right below that mark. The Trip Qs weekly chart, all-time highs. But we have backed off. Let's go to a daily chart. How was today's volume? Very light volume. Let's bring up Microsoft. Microsoft being the top component, largest component of the Trip Qs. Bearish reversal bar. I thought they were going to move higher today. I have to admit. I think I even said that this morning on Swing Trading Today. Let's talk about Microsoft for a moment. So Microsoft continues to put in lower highs. Now I'm just identifying potential weaknesses. I'm not in any way implying that these shares should be shorted. If you short these shares, you're crazy. So please don't go shorting Microsoft based upon these observations. So Microsoft, all I'm trying to ascertain is whether or not we may get a breakout on the Trip Qs. Microsoft would certainly help that if it did break out. We had a bearish reversal day today. Volume was light. Let's take a quick look at, I think Apple's the second largest component. Yeah, so I spoke about this a couple of weeks ago, and I speculated that what we might see is rotation out of the Trip Qs and into only when I'm live. What did I do wrong? Oh, I didn't put the dollar sign. Sorry. My fault. My bad. All right, that's not working. What's going on here? All right, there we go. All right, so this is the relative performance, SPY versus the Trip Qs. And you can see the S&P 500 was just getting annihilated. And I was looking at this W formation that formed up, and I said, you know what? What they're probably going to do is that they're going to start doing some sector rotation out of the Qs or putting less money into the Qs as a balance sheet trade and starting to buy up the beaten down names and allow them to play catch up. And it made sense. And we enjoyed Boeing. We bought BRZU up 62% on that trade, more than that, I think now. So, you know, we joined in as well. So this is probably going to continue a bit longer. But I suspect that if we begin to see weakness in the industrial names, in the transport names, what they'll do is before they let this market roll over yet again, they'll go back to the Qs and try to bid them back up. And that'll probably take us into the election, which is why I'm not running in dying to get short right away. We do have a small short position, not big. And that's a China trade. Yeah, so it looks as though this is going to continue, where the S&P 500 as a whole continues to do better versus the Trip Qs. Let's go to the financials, because at current they're a critical component, because that's where the money's rotating into. Huge move. I missed this move. I wanted to buy Goldman Sachs. It got away from me. We were right on the fact that they would move higher, but I just didn't pull the trigger quick enough. Got away from me. So what you're seeing is the reaction of the banks to this. Have no doubt. This breakout here is directly correlated to the performance of the banks. And as long as that continues, the banks are going to continue to do well. Let's check out Goldman Sachs. Damn. Okay. Anyway, semis. Huge week this week. I can't say that I expected it. Big week. Up nearly 6%. Volume is going to roll in light. Daily chart. Getting a little bit extended here, but look at where they're at. They're approaching all-time highs. Here's where we're at. Incredible. Biotechs getting hit hard. There's going to be opportunity here. The weekly chart does not look good. We had broken out 3 weeks ago, and now we have given that up and failed. Energy. I knew this was going to rally, and we took advantage of it vis-a-vis natural gas. And we remain long at current. We probably have more, pardon the pun, I have to do it. We probably have more fuel in the tank for energy. Is that good? Daily chart. Let's see if this is sustainable. Yeah, it's sustainable. Bullish reversal bar today. Not loving the volume. Oil. Despite the weak OPEC meeting, they had a horrible OPEC meeting. Oil's moving higher, up over 6% on the week. And it looks as though it wants to move higher. Let's check out nat gas. Seymour Rivers, kind of trippy video, Bob. Is it because of the background and the flickering? Oh yeah. I see your comment, Seymour. Yeah, it's actually not a green screen. It's if it were a green screen, I wouldn't have that flicker. It's a program that's it's embedded in my CPU and it works with the software that allows me to live stream. It's hard for me to explain, but is it annoying? That's what I was most worried about. If it's annoying, I'm going to stop using it. I'll get a green screen. Emerging markets, they were due. I had been saying I don't want any part of the EDC or any international global fund, that emerging market fund that had me exposed to China. So we went country specific, and we're doing very, very well. At last look, we were up 62% on it since we opened it up, and that was like 2 weeks ago. So we're doing very well. And we're probably going to add more to it if we get a nice pullback. TA, you don't like it, huh? All right. Gold. You know, what can you say here about gold? I've been warning the past couple of weeks that if my blue cuff's invisible. I saw that before. It kind of freaked me out, to be honest with you. I was like, yeah. So here, let's do this. Let's go over to the 10-year, and I'll illustrate what's going on here. I think I did this last week, but I'm sure there are people that either didn't get it or weren't watching. So I want to redo it again. Let's quickly do it this way. This is a different way. We're going to show relative performance of gold versus the 10-year yield. No, this is not working. Let's go to a daily chart. Okay, so this is better. All right, so you can see that yields are now having the best of gold because they're rising. Gold is feeling the pressure. A better way to illustrate it is to simply do this, I guess. We'll do price performance. We'll also do a correlation. We'll make yields gray. Seems appropriate. We'll go to a weekly chart. And you can see clearly that there's an inverse correlation, right? If this line is trading down below 0, there's an inverse correlation. They don't trade in correlation. It's very, very rare. They did here for a brief period, for whatever reason. I believe that was the was that the when we attacked that general? No, that was 29. That was 2020. This goes back to 2018. I forget what it was back then. Anyway, when gold rallies, or I should say, the tail that wags the dog here is the 10-year yield. As yields rally, bonds come under pressure. And that's what you're seeing at current. Let's go to a daily chart. Yields are rising. here. Today, gold bucked the trend. Yields rallied, so did gold. But the past several days hasn't been the case. We've seen yields creeping up and gold creeping down, right? Just the way it is. Now, the question then becomes, what happened? Hey, Norris, where have you been? Don't you think the bottoming tails of the last few days mean something on gold, Norris? Russ just made a comment. Gold will rally into tomorrow's close and sell off again Sunday night because the Fed will attack gold for the 30-year bond auction. Busy? I don't understand. I think you meant gold, Norris. Yeah, I'm paying attention to it on a weekly chart. All right, so the question that becomes, what happens when inflation begins to rear its ugly head? What happens? What does that look like? And here's what I expect to happen. This is a quarterly chart. The last time you had a multi-year bull market of yields moving higher and gold moving higher was after Nixon took us off the gold standard right through until Paul Volcker became Fed chairman, raised rates through the roof. Gold continued to rally until he finally broke the back of inflation. I think that was the second year of Reagan's term. And from that point forward, yields have been in a bear market. That may be coming to an end fairly soon if we get hyperinflation. That's the Federal Reserve says they want inflation. They don't want inflation. That's the worst thing for them. If you want to talk about civil unrest, hyperinflation, people chasing after rats in the street like they're doing in Venezuela, people have no idea. The gold miners, a very bearish week. We haven't taken out last week's lows, though. The utilities, I like the utilities. I'm glad we're getting this pullback. Volume this week is big, but we're seeing a big topping tail here. We were extended. We're pulling back. I think we're going to get an opportunity here to buy the utilities in the coming I don't think I wanted to see how the utilities perform during this time frame. Let's see if we have a aha. I want to see how the utilities performed during that time frame when gold and yields were rising. Probably not that well because they issue bonds. And they have to compete with treasuries. We'll make the utilities brown. That seems appropriate. Initially down. They held their own. And they paid a yield. Interesting. Okay. So the utilities we're liking for that yield. Let's do some... DBA, agriculture. I think we have our higher low here. We're exposed to agriculture already. I may buy the DBA. Here we go. Weekly breakout on the DBA. You heard it here first. We've been talking about it. Tell a friend. Subscribe to the channel. Please. Hit the like button. Please. Don't be shy. Smart move, TA. All right, let's do some chart requests. Oh, I'm going to be using TrendSpider. So if you guys want any, if you have any feedback for TrendSpider, by the way, I'm an affiliate. I have a link down below. If you like it, 25% off. Use the link below in the description area. I'm meeting with them tomorrow. If you have any feedback for them that you would like me to communicate to them directly, I'll be more than happy to do so. Yeah, I like the utilities. I've been looking to get back in. We bought them at the lows of March, or near the lows, I should say. We sold them. I should have held on to them. But we bailed, and now I'm looking to get back in. So, yeah. And that's more of an investment for the yield, because I'm getting older. Russ, Bob, are you a Peter Schiff fan? Yes, a very, very big Peter Schiff fan. Very much so. I'll put it to you this way. I think that in terms of macroeconomics, he's top notch. I think he's not a market timer. He fancies himself as a market timer at times. He's not. So while I thoroughly listen and respect every word he has to say about the economy, and at times will repeat it because he's far more qualified in terms of technical analysis, I think his timing tends to be a little bit off. He's, I'm not saying he does it intentionally, but he does have a gold company, sells gold, and he's a very good salesman. So he's been selling gold for a long time, and he was a little bit early on that trade. Okay. Let's start with TA wanted AAL. TA is one of our members. I always go with members first. Okay. All right, American Airlines, not my favorite. I like LUV better. However, 6 of one, half dozen of the other, as long as they remain solvent. And that's my biggest concern with the airlines. All right. So where we close today is right at resistance on a monthly basis. We have broken out on a monthly basis, but we're also at resistance on a monthly basis. There are probably a lot of shorts in this name, so it will probably press higher. Weekly chart, same deal here. So I can't buy the shares right now. Now, if you get a quick pullback, to just over 15. I'll get that price for you in a moment. Pull back to 1550, 1545. That would be a good entry point. Because keep in mind, you may be saying it's not going to happen. It probably will happen because we closed out the day above the third standard deviation Bollinger Band. You've been with me long enough to know that when you close above that Bollinger Band, in all probability, you're going to get a pullback. The only thing that may make me wrong here is the fact that you have probably have a lot of shorts in the name. Perhaps they'll continue to squeeze it higher. But I wouldn't buy it until such time as we closed out the week above 1670. Let's call it 1690 or a pullback to support. I think it is going to move up higher, but I think it's gotten ahead of itself. Boeing. All right, so for disclosure purposes, we are long of Boeing. We have been long of Boeing. But frankly, I'm closer to looking to book profits than to add more here. If you're looking for a long entry point, I would look to enter at that price point. But I think before we hit that price point, we're heading up here to $197.75 to $200 per share. I think that Boeing is probably going to continue higher here because you have a lot of fund managers that have to send out their statements at the end of this month. Many of them have not been long or have not had enough exposure to the market. They're going to need to buy stock. So Boeing is definitely a blue chip, definitely one they're going to want to show their customers they got with a below $200 a share. So I think it's going to be a foregone conclusion that we hit $200 by the end of the month. So, and it's at that point where I'll probably be looking to make profits real. I'll probably keep a few shares. Drilling down, weekly view. That alert never fired off. I would have bought more down here, 155.90. The weekly chart looks good. Daily chart. Yeah, in all probability, we're going to bolt up to 197. They'll probably kiss 200 just to show a print. So I think Boeing, it continues higher, will remain long. I'm not going to buy more right now, though. BA we did. CCP. RL, CCP. Is that a symbol or the Chinese Communist Party you're mad at? Let's see what we got here. I don't have a symbol popping up. He must have been referencing the CCP, Communist Chinese Party. RJR. Beautiful breakout. Monthly chart, beautiful breakout. Multi-year consolidation. This is beautiful. I'm going to set an alert. I don't think I'm going to get it. Okay. It's broken out on a monthly basis. Weekly chart. Broken out on a weekly basis. Daily chart. It became extended. Backed off yesterday. Today, inside day. I think we consolidate a bit more here. Here's that alert I set. I may have to settle for a higher price. I'm interested in the shares, either this stock or Smith & Wesson, which also looks good. All right. So I like RJR. Looks really good. All right. Is that it? That appears to be, oh, CIDM. Denny, yes. Smash the like button, please. CIDM. Oh, my God. You guys hit me with these. What does this company do? I have to know. I have no idea. I've never heard of it. All right, so at current, it is currently trading on a monthly basis above what was support back here throughout 2017. It's early in the month. So I'm going to say it's currently still acting as resistance. And you can see that we've sold off the highs of the month so far. Multimedia. Okay. Weekly chart. I couldn't buy it. I'll come back to this chart in a moment. As a matter of fact, I may not need to. Yeah, I will need to. Wait a minute. Where am I at here? 269. Let's go to the weekly chart. All right. So what I would do here is this. In dash line is the weekly support. In solid line is daily support. I would create an alert because I think you're pulling back here. And you're going to pull back big. it's probably going to be a bloodbath. So please don't catch a falling knife. I would be prepared to what happened to my alert? It didn't fire off. All right. It's here though. So the alert's set for support to be hit at $2.67. Be prepared for an overshoot to the downside to weekly support at $2.40, $2.44. Chuck, MCD. They put out this online, this virtual signaling crap that these companies. I'm not going to get into it. Let them do what they want to do. Not for nothing. McDonald's was having their problems, their issues, well before the pandemic. They had a lower high. The pandemic really ripped them apart. We have a bit of resistance here, which we're at current above, to be fair. 192.20. I think that the shares will probably move up higher to around 198.66 before hitting some serious resistance. Maybe a little bit higher, maybe $200 a share. Weekly chart. Nice breakout on a weekly basis. It should still continue higher. Stokes look good. RSI looks good. Note this volume bar here. There's a lot of resistance up here. It's going to have to slug its way through. You could see that today we had a new intraday high as we hit that volume bar, but we couldn't make a new closing high. Or did we? I just want to make sure I'm accurate there. It's very close. Close 193.24. No new closing high. Nickel shy. Hey, Oliver. All right, we'll leave off with Disney. Oliver, what do you think of my background? You're a straight shooter. You like it? You're welcome, Chuck. He's bullish. Disney, looking good. Nice monthly breakout. Ooh, love the setup here. It's not quite a retest, but it's Disney, so you give it a pass. Because we had broken out. Now we're pulling back. We have a follow-through week. Thanks, Oliver. Take off the grid lines. What do you mean? On the background or the chart? I can't do it on the background. Daily chart on Disney? Yeah, I can't do it. That's the technology. It sucks, I know. Daily chart looks good. I think we're heading up here. Boom, 128.94. I'll do a little bit of research. I just put it on early this morning. I had to do something new. All right. All right. With that, folks, I'm going to say everybody have a great night. Thanks for joining in. Members, Saturday, the week ahead commentary. And everybody have a great weekend. And I'll talk to you soon. Be well. And smash that like button, please. And subscribe. Be well.